They're nearing 3 million subscribers this quarter, but expanding onto the global stage just slapped them with an $86 million GAAP loss. Welcome to Earnings Unscripted. It's August 10th, 2026, and we're looking at Q2 for HIMS and HERS, ticker HIMS.
Right. The growth engine is still screaming. You look at the top line, they pulled in about $753 million, which is up sharply from last quarter. But the real paradox here is that their free cash flow completely collapsed from positive to negative in a span of 3 months.
Yeah, their actual net loss was 37 cents a share, which is, it's slightly narrower than Q1, but a massive reversal from the profit they posted last year. How did the tape react to that kind of whiplash?
Not well at all. The stock rode a huge upward trend all quarter, but once these numbers dropped, shares just completely rolled over in the extended session, finishing down roughly 6.5%. And just a fast note, since we're grading the market's reaction, all of this is strictly our own perspective and not investing advice. But yeah, people saw the cash burn and sold off.
Well, management definitely brought a good story to the call to cover up that burn. I mean, they completely revamped their customer support for the women's weight loss side in July. They threw this AI layer over the front desk, and suddenly it's confidently handling the vast majority of patient questions, literally cutting the human workload in half.
Yeah, they automated the friction away, which is fantastic for operating leverage. The problem is they took those savings and instantly buried them in physical inventory. They're pivoting so aggressively into branded weight loss drugs that the upfront costs are absolutely choking their working capital.
And that doesn't even touch the legal drama yet. They quietly set aside tens of millions just to brace for a courtroom brawl. And I really need to know why they chose to fight the FTC instead of just taking a settlement.
Well, that comes down to principles versus pragmatism. They booked a $47.5 million contingency this quarter because negotiations basically fell apart. Yemi Okupe, the CFO, actually said, "Following nearly 3 years of cooperation throughout the FTC's investigation, we were not prepared to accept the terms we do not believe reflect the facts or the law."
Right, so they'd rather take the massive hit now than sign a consent decree that alters how they do business, because this is mostly about auto renewals and advertising.
Exactly. They spent months trying to compromise. But at a certain point, if the regulator wants structural changes to your privacy and marketing funnels, settling costs more than fighting, even if fighting completely nukes your current quarter profitability.
Which it definitely did. It's wild that a regulatory battle is dragging them down right as they're trying to manage this massive global weight loss expansion.
And that weight loss scaling is exactly why the operational cash is disappearing. We touched on the inventory drag, but management actually had to establish a new $400 million receivables facility just to handle the squeeze.
Okay, wait, say that again, but slower. A receivables facility. Are they basically taking out a massive loan to buy diet pills?
Close, but no, that's not quite it. It's a liquidity valve. When they sell branded GLP-1s, those are incredibly expensive to acquire up front. It ties up their cash. So they package those short-dated accounts receivables and sell them off for cash immediately rather than waiting for customer payments to trickle in.
I got it. So they're just pulling the cash forward to keep the machine fed, which makes sense because they need a ton of capital if they're also doing things like, well, building an actual chemical lab in California.
Yeah, the Menlo Park facility. This is probably the most radical pivot in the whole report. Instead of just being a digital storefront that outsources to pharmacies, they're physically compounding their own active pharmaceutical ingredients in-house.
Wow. Really? So they're actually making the raw drugs now. I thought they just prescribed them and shipped them in nice packaging.
They were. But now they're literally testing stability for a synthetic peptide called BPC-157 right in their own tanks. Andrew Dudum framed it directly, saying, "We are currently developing a best-in-class peptides experience. We've started validation and stability testing on APIs for those peptides developed in our Menlo Park facility."
Peptides, the anti-aging and muscle recovery stuff. But hold on, isn't the FDA cracking down super hard on compounding facilities right now? Doesn't this entire Menlo Park operation depend on whether the FDA even allows them to sell it?
That's the gamble. The whole strategy rests entirely on pending FDA rulemaking. If regulators say no, they just built an expensive chemistry set for nothing. But if the FDA gives the green light, HIMS essentially owns a native domestic drug supply.
It feels like a massive strategic shift. They aren't just a telehealth app anymore. They're verticalizing into literal pharma manufacturer while fighting the FTC in federal court.
It's a lot of moving parts, and they're intentionally crushing their own margins to do it. OkuPay specifically guided that as international revenue and branded weight loss scale up, gross margins will remain below the levels they've historically achieved. They're explicitly choosing scale over near-term profitability.
Which means they view this Wegovy craze as a giant customer acquisition funnel, right? They'll take the lower margin on weight loss drugs today to cross-sell those patients higher margin treatments tomorrow.
That's the entire bet. And the scale of that funnel is staggering. When they launched their European infrastructure through the Eucalyptus acquisition, they amassed weight loss wait lists of tens of thousands of people in places like Germany and the UK over a matter of days.
But European regulators are famously strict about advertising prescription medicines directly to consumers. How are they building wait lists of tens of thousands of people over there without risking massive local fines?
Honestly, they're probably risking fines. It feels like the classic tech playbook. You push right up to the regulatory line, or even step over it, gather a massive user base, and figure out the penalties later as a cost of doing business.
Right, the whole move fast and break things routine. Except here we're talking about human health, not software. But it kind of speaks to their overall aggression right now, doesn't it? They're just completely swinging for the fences.
Oh, they definitely are, and management seems to agree because they raised their full-year guidance across the board. They now expect revenue for the year to land somewhere between $3.1 and $3.3 billion.
That's massive, and Yemi Okupe actually went out of his way to highlight that confidence on the call. He specifically said, and I quote, "We expect our domestic business to continue accelerating through the second half of the year, and as a result, we are raising our 2026 revenue outlook and building increased conviction in our 2030 targets."
Yeah, that's an incredibly confident thing to say when your operating cash flow just fell off a cliff and you've got regulators circling you on 2 different continents. But that's the bull case, right? They think the pain today is just the admission price for total market dominance.
Okay, so looking ahead to next quarter, what's the actual metric we need to watch? Because obviously that cash burn is terrifying if it doesn't eventually correct.
The main thing I'll be tracking is the FDA final rulemaking on those peptides. Because if regulators shoot down that Menlo Park lab, all this vertical integration talk evaporates instantly. Plus, we need to see if those massive Wegovy waitlists actually convert into higher margin cross-sells, or if patients just grab the cheap diet pills and churn out.
Right. Churn is always the silent killer in telehealth. Well, it really feels like they've evolved from a simple digital storefront into a wildly complex global pharma operator overnight. It's an incredible story to watch, but definitely a volatile one. I think we've unpacked enough of this puzzle for today.
Always a pleasure. See you next time.
Before we go, if you like hearing the numbers unpacked like this, hitting subscribe is the easiest way to keep them coming. And just for full transparency, this entire show, including both our voices and the script, is completely AI generated. That's how we're able to digest a massive FTC lawsuit and get it into your feed the exact same day. Tell us what companies we should tackle next by emailing earningsunscripted@datamadness.ca or hit the X link in the show notes.
Thanks for tuning in.